This interview is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm pleased to have Ed Steer back with me again. He is with the Gold Antitrust Action Committee and also writer for KC Research. It's great to see you, Ed.
Always glad to be on your show.
Now, Ed, there's been a lot of buzz lately about China potentially having to declare their actual gold reserves in order to become a reserve currency or qualify with the IMF. What's your take on the situation there?
Well, certainly I think that the IMF is going to take the yuan under its wing when the final meeting comes in October. There was a story about it in the paper just the other day. And as far as their gold reserves are concerned, as everybody knows, that they haven't declared the reserves for, 5 or 6 years now at 1,054 tons. And everybody has a pretty good idea
Since
that
2009, I think.
2009,
yeah.
Exactly. And I think that everybody has a pretty good idea that they have many thousands of tons more than that. And how many more thousands of tons they have? Are they going to disclose all of it or just part of it?
Right.
You know, the Chinese have been around for 5,000 years as a culture and a civilization, and I greatly admire and respect that. So they're going to do what's in their own best interest. So whatever number they come out with won't surprise me at all.
Right. Because, I mean, at the same time, they're accumulating all of this gold. So if they declare having more gold or as much or more gold in the U.S., it'll just make it harder for them to continue to accumulate it.
Continue to accumulate it? Well, the thing is, it all depends on the price. And the price is not set by anybody in China. It's set by the COMEX and the CME group.
Right.
And the central bank, or basically JP Morgan Chase and 3 other banks, set the price of gold. So if we don't get any change in what Goldman or JP Morgan does, then we're not going to see a change in the price either. So I don't care what supply and demand is. As you know already, supply and demand is through the roof, or at least demand is through the roof.
Right.
But supply isn't there, but it doesn't matter when it's all set on the paper market in New York.
Now, what's happening with silver? I think in the last month, it looked like there was a really strong technical breakout coming out of a 5-year trend, but it was subsequently came down afterwards. What do you think happened there?
Well, what happened was that if you look at the commodities trading, the COMEX, and you look at where the paper positioning was in the COMEX, as far as silver is concerned, it was set to blow sky high. And as Ted Butler and myself and a few other people have written, that provided that JP Morgan Chase and Scotiabank and Citigroup and HSBC USA didn't step in front of the rally, just put their hands in their pockets and didn't do anything, that we'd see a silver price that would frankly make your eyes glaze over. I said that in January, I'll say it again now. You're talking some rather large 3-digit silver price and a very large 4-digit gold price. And of course the entire commodities complex would be dragged along with it. So this silver price didn't break out, the gold price didn't break out because they stepped in front of this rally, and now we're back to where we were, I don't know, just a month ago. I mean, they did this whole thing in, 5 business days. We went from a wildly bullish configuration to blow up to the upside to one of the most negative commitment of traded reports that we've ever seen.
Right.
So they are just absolutely ruthless, and it's just getting worse all the time.
And what do you see happening in silver over the next year?
Ask Jamie Dimon and then I'll know.
Right. More of the same, pretty much?
Until JP Morgan Chase and the other banks either do it on their own initiative or are instructed to stand back, we're going to see pretty much what we have right now. And the commodities complex, along with gold and silver, of course, are going to stay right at the levels they are now, which is really unfortunate.
What do you think of what's happening in the U.S. economy right now with this potential rate hike looming?
Well, if they raise rates, it's going to be by about this much. I think the psychological effect of raising interest rates in the United States, even by the smallest amount, would have a very bad impact on the bond market, the stock market, and of course the ripple effect around the world would be instantaneous.
So you think it'd have a negative impact, not a positive one?
Oh, hugely negative. Jim Rickards, whose work I admire greatly, and I know Jim very well, said that they're never going to raise interest rates again, and basically that's what the world's situation is. If they can't get the money for free, they can't afford to paper over everything. So I'll be very surprised if they raised interest rates.
Right, so you don't see it happening anytime in the next year or two, or?
Who knows? I mean, this whole paper mess that we see out there is such a financial illusion that anything's possible. It's such a crooked system that I'm just sort of sitting here waiting for the whole thing to blow up. And like we talked about before, the Chinese and the Russians are buying all the gold they can because they know that sooner or later all paper systems crash and burn, and that's what they're waiting for.
So what are you advising investors in your letter?
Well, I don't really advise investors because I'm not an investment newsletter, but what I tell people is that, for what money you can afford to spend, go out and buy as much physical silver and physical gold that you can afford, because sooner or later it's going to be at a price that will make your, like I said, your eyes glaze over because it's going that high one of these days.
Well, Ed, thanks so much for the update and for stopping by.
Well, thanks for having me on.